Good afternoon, everyone, and welcome to Afternoon Market Action. My name is Glenn.
My name is Patrick.
And we are your hosts today for the next 45 minutes to an hour or so, giving you live market analysis on what's going on in the market. And I'm glad to have you here. We're glad to be here. If you can hear us, by all means, respond in the chat, whether you're on Facebook or on YouTube, to let us know that we are coming across loud and clear. Interesting that Patrick and I put up a couple of shorts today on the YouTube channel. Hopefully you checked them out. Patrick did a video prior to the market open about GME. He's going to talk about GameStop today. I did a short on what was going on in the market, and I did a short on a day trade that I was actually trading today as well. Hopefully you guys are paying attention to the shorts that we put out. We're trying to give you as much information about what's going on in the market to help you guys make money. That's our goal. Our goal is not to pump or dump any stock. It's about giving you usable information about what's going on and how you guys can make some money in the market. So it looks like I'm seeing Boston is on Facebook. She's probably on YouTube as well. Bill is back. Greetings from after a month off in St. Louis. Glenn, do you put your short trade in Twitter by chance? You know, I did not put it into Twitter. I got out of it. I made about 10-11% on the trade, as a matter of fact. But I did put it on YouTube to show you how I was managing the trade. Nonetheless, and I did get out of it based on one of the 3 metrics that I talked about in that short video on how to manage that trade. All right, so you guys need to keep your eyes open on our YouTube channel for a lot of shorts that Patrick and I will continue to put out. Great additional content as to what is going on in the market. All right. Yeah, I can see that Boston is in both. She's in Facebook, she's in YouTube, and she's in VectorVest chat. So she's really one of the... Stop crunching the carrots. I gave Joey some carrots, and now he's going to make a whole lot of noise crunching the... Stop crunching the carrots. I
at
need
least
to...
he's eating carrots. That's a step forward, right?
Yeah, he needs to. He needs to have more carrots. Joey is our producer. Wow, he threw a carrot at me. Joey is our producer. Say hi, Joey. All right, so let's get into it. I got a news article that just came out about an hour ago that I did not put into here, but the story came from Yahoo. The Fed's Brainard sees further rate hikes, restrictive policy for some time. So a lot of people, between what Patrick and I have been talking about on YouTube about bottom fishing, the market can still have some levels of pulling back a little bit more. Patrick and I will both comment on that. And we're getting to the levels by way of VectorVest that the market is starting to look for a bottom. We'll get a little bit more into that as well. But Vice Chair Lael Brainard says Wednesday, which is today, that with a small drop in inflation is welcome, the Fed will still need to raise interest rates further and for as long as it takes to bring down inflation. That's huge about what's going on in the market overall. And today we do have a rebound day, but the news out there, the Fed is just being brutally honest about what they're doing in regards to inflation, and that is still to continue to raise interest rates, which will affect companies' bottom line. So we'll get all into that as well. So let's start with the first news article. Oh, we're already there, Joey? Why you didn't tell me that? Anyway, here's our first news article. Oil prices drop, stocks gain as Treasury yields ease. Oil prices are still dropping. You guys know how I feel about oil. I still think that oil is a good longer-term play, but right now is not the time to be in it, unfortunately. I got rid of my oil. What was I in? San Juan Basin. I got out of it. I still got out of it with a gain, but I still think that long-term we're going to see prices of oil go back up. We'll see what goes on with that. What do you think, Patrick?
I mean, yeah. So far, everything hasn't really, or nothing's really changed. In the current factors driving oil right now. There's still issues going on all across Europe. So until something changes with that, I don't see oil being, yeah, there's a potential talks about recessions, but even during a recession, if there's a squeeze in oil, if you don't have enough oil to keep up with everything, regardless of recession or not, oil is going to still go higher. So short term, yeah, short term I can see it pulling back a little bit, but longer term, or over the next 6 months at least, I see oil definitely being a good opportunity there.
All right. Is there a problem? Maybe it's on my side with my speakers. You guys getting an echo?
Turn off the laptop music. What does that mean?
Turn off the laptop. I don't know. The laptop mic is not on, and I turned down my speakers. Yeah, everybody's saying yes again. So Joey will work on that. Sorry about that, folks. Joey will work on that. It says Patrick's. Patrick's mic is fine. Wow, everybody's saying yes. All right, Joey will work on it. We'll get it fixed. Let's go to the next story. All right. Joey, there it is. U.S. stocks turn lower to start the week ahead of new data. Again, even with the update today, I need you guys to be very, very careful. Question comes up is, do you sell out of your contras? So let me answer it this way. If you guys have leveraged contras on a day like today when the market's moving up, you need to be out of them. If you have the non-leveraged contras, you're still able to hold on to those because they're non-leveraged. But if you are in double and triple leverage contras, on any good up day, you should be closing out of those contras. Does everybody in the room understand that? Type a 1 in the room if you understand that. Type a 2 in the room if that doesn't make sense. All right? On a good up day, your leverage contras you need to be out of. And if you can get out of them early in the market open because the market opened up nicely, that is the best time to close out of those leverage contras. If you are in non-leverage contras, you're a lot less susceptible to big swings to the downside or, pulling back. You're still going to get some hurt, but not as much as if you were in double or triple leverage. All right. So Henry on Facebook says 2, that you didn't understand that. Again, leverage moved 2 or 3 times more than a non-leverage. So on a good up day, those leverage contras you need to get out of, and you need to get out of them early. All right, let's go to the next one. And this is Patrick's story. Apple's new iPhones, watches are coming out at a tough time for consumers. Talk about that, Patrick.
Yeah, so it's going on right now. Apple has their big revealing of their new Apple Watch, so far iPhone that they're talking about right now. Also has their new earpods or AirPods, whatever you want to call them. The watch, they have 3 different versions coming out, which is definitely nice. They have an SE, so a basic version, the iPhone or the iWatch 8, or the Apple Watch 8, and then the new Ultra, which is supposed to be the rugged version for outdoors, being able to take it for diving, really extreme weather conditions, all of that. With all the recession coming up, that's the thing that everybody's kind of wondering about, is because Apple products are so expensive, or just tech products in general are so expensive nowadays, especially with the current inflation and issues getting chips, all of that, are people really going to be flocking to spend extra additional income on the brand new phone, or are they going to be extending their phones out and letting them run longer? The fact that they came in with an SE version is definitely going to be useful. But at the same time, when prices continue to go up, people are already feeling the pain. Even if you put the nicest, best product out there, if people don't have that extra income like they've had for the last decade, they may, wait and hold off from purchasing that brand new iPhone because they still got to put gas in their car to get to work every day. They still got to go to the grocery, or they still got to get groceries to be able to feed them and their families. So, yeah, I think, these products are great. Everybody loves new iPhones, new Apple Watches, all of that. But I don't know if it's going to be the best economic environment for these new products to really thrive. One of the things I've been kind of watching for is if they're going to be releasing, newer, cheaper products or cheaper versions of them, and they definitely seem to be doing that. So they're being mindful of it, but still, even the cheaper versions are still going to be expensive. So the article, I mean, pretty much summarized all into that. But it just talks about, the Apple products are expensive. It's costing them more to manufacture them, more to make them. Are people, that's a big question. Are people really going to be willing to shell out right now even more for a brand new phone if their old phone's currently working and, they still got to make sure they can go and pay for groceries and pay for gas and pay for their utilities, especially in Europe. So it's going to be interesting to see. Glenn's going to buy it. Yeah, Glenn's definitely going to be buying it.
Yep, that's absolutely right. That's absolutely right. So so now Patrick and I differ a little bit on that. I am a full all-in Apple geek. As I've shown you on the stream before, I've got the new iPad Pro 12.9 inch version of it with a keyboard. Patrick and I were just talking about that. I've got an iPad mini. I've got my watch. I've got my phone. And I am of the mindset of there is an eclectic group of Apple people call us part of a cult, that will buy the newest devices. Now, I'm going to buy it. You're doggone right. I'm going to buy it. And I still think that, from my opinion, that there is enough people in the Apple ecosystem that will have the money to spend. Will sales be affected because of inflation? I'm with Patrick on that. I do think that sales will be affected due to inflation because with them having to build the phones at a higher price, they're going to pass it on and us nerds are going to still buy it. Toilet paper rolls are smaller. Good try with the inflation reduction. The same goes with the iPhones. All right, we'll see. So two differing opinions. Patrick thinks that Apple could be affected adversely because of the situation or the climate that we're in. And I agree with that to a certain degree, but I don't think that they're going to be hurting for sales.
But think that's the thing, though, is over the last few years, I feel like over the last decade, that group of that strong Apple following, that group of people who follow Apple 100% of the time, I feel like that has been getting smaller as Androids, even though I'm not a fan of Android devices, I'm an Apple guy. That group, though, is getting smaller as time goes on. So is that shrinking group of diehard Apple fans enough to keep the stock going higher?
And I like 427 trading. Apple users have higher disposable income. Yep. Absolutely. So,
looks like we're going to be seeing more Range Rovers out at Aldi's again.
And you know something? They'll go to Aldi's because they want to save money on food, but they'll have the iPhone 14 Magnum Plus extravaganza while they're going to pull up that phone to go look at their shopping list to go shopping at Aldi's in the Range Rover. That's what they're going to do. My wife and I used to buy a new Apple phone every 2 years. Now my wife buys a new phone and I get her old one, and my wife is an Apple geek. So, that's typical. Your wife gets a new car and you get the hand-me-down. Mark, that's just how it works. That's just how it works. It's okay. It's okay. All right. So I from the standpoint of looking at this from an Apple perspective, do I think that Apple goes down in price a little bit because of sales? Possibly, but I still think it's one of the strongest stocks out there in the whole tech sector.
I agree. So, I mean, they have more cash on hand than our government does. So I'm not debating that. I don't know. I don't see the urgency to rush out and go buy the brand new iPhone and Apple Watch and everything else when people are struggling to be able to pay for groceries and everything. So,
All right. I got you.
yeah.
All right. Let's move on to the next story. And Nick says it's hard. I think it was Friday. Market up in the open, but closed down. You know why that is, Nick? Because we still have high volatility. We're going to have the days where the market's up in the morning and down at night, or down in the morning and up at night before it closes. That's just high volatility. But when we get into the software, we're going to see what the overall trend of the market is and what we see going on today as well. All right. Google CEO says he hopes to make company 20% more efficient, hints at potential cuts.
Okay, 20%, 20% cuts coming soon.
Yeah, you're going to make it 20% more efficient by cutting 20% of its staff.
Yep.
Anyway, another company out there talking about laying off. And one of the things that are keeping us from a full-blown recession is the job market. Unemployment is still low. And typically in a recession, unemployment starts to rise. It hasn't been there yet. So, but slowly but surely, if you follow me on Twitter, I keep reporting out or tweeting out the companies that are either thinking about cutting back on staff or are cutting back on staff. So, and Joel says, do more with less. You know, everybody says that. Every company says that. Folks, we can do more with less. Hell, if we couldn't do more with more, what makes you think we're going to be able to do more with less? I don't know where that comes from. Well, we got to be more efficient. Efficient how? What do you want me to do? Do more. All right, so I just ranted. Joey will cut that out. I just ranted. I never understood the do more with less if you're already efficient. And if you're not efficient, then you work on the things to make you efficient without trying to do more with less, Joel. That's how I feel about that. All right. The next story, and this is a story that bothers me. We should have learned from this already, right? 2007, 2008. Did you see the story, Patrick?
Yeah,
Citigroup,
I saw it with Bank of America, though.
Well, now here's Citigroup joins the industry effort to lend people money without credit scores.
We will never learn, man.
How many of you think that this is detrimental to the economy, type of one? How many of you think that it's...
No checking for income, no nothing, just...
We learned this. We learned this back in 2007, 2008. We learned this. And it makes me pause for a moment.
Back then?
How do we not learn from what we went through there?
Aren't these ninja loans, basically?
I don't know what a ninja loan is.
Let's see, because...
If
anybody confirm it, because I think the ninja loans were what they did back in 07, 08, where they would just give people loans without doing any background check, any proof of income, any of that. So, I mean, that's how drastic the slowdown has been from rate hikes. Nobody's getting a loan right now unless they absolutely have to. And so they're trying to find people that are, or they don't realize what's going on that they can take advantage of. It's predatory. You know, they're trying to find people, that anybody they possibly can, to write a mortgage, so that way they look better, they have better numbers for their company. But yeah, I mean, this is predatory if you ask me.
You need one tooth and a pen to get a loan. Well, that's good for you, Joey.
Okay, we have a good one.
You're missing the pen? All right. This is just bad. If we're already looking at possibly being in a recession, this adds to the bad news. This adds to the bad news. A ninja loan is a no income, no job assets loan. Who gets a loan? There you go. So who does that? Who would want to do that?
Well, I thought they were banned after 2007, 2008, but apparently they're not.
Ninja said that was cruel. What did I say that was cruel? Oh, about Joey?
See?
Oh, I don't even realize. All right, I'm sorry, Joey. No, no, I'm not sorry. He's throwing me he's throwing carrots at me. I'll eat that one. All right, let's get to the next story. You know, I'm on board with the EV space, but I'll always bring the good news along with the bad news. NIO, stock ticks lower as losses widen in Q2. However, NIO's deliveries ticked higher by 14% year over year. They delivered 25,000 vehicles in quarter two. Revenues increased by 21%. So they missed on earnings. They missed on earnings, but they're producing the cars. I'm a big fan of, in regards to the EV space, the EV company is only going to be as good as the deliveries that they make. We know that Tesla is producing the cars. We know that Ford right now, after they're not producing enough to keep up with the demand. You look at Lucid. Are they producing enough cars? You look at all of the EV companies. Which ones are really producing the cars out there in order to be a company or an EV company that you want to invest in? So even though they missed earnings, they did pick up in revenue by selling the cars. So that was a very interesting story, and we'll keep our eye on that. Do you want to add anything to the NIO story?
I mean, I think China has a lot of issues going on right now, and this is just one more to add to it.
Okay.
But I mean, when you go in and out of rolling lockdowns, it's going to be hard to keep production and keep everything going.
And NIO, when it came out, was supposed to have been the Tesla in China.
Yep.
Never really met up to the hype. Is Tesla a sell now? I didn't say Tesla was a sell. Did I say that? Did I say anything about Tesla being a sell? I didn't say nothing about Tesla being a sell. All right. And one other stock that I have on my list, Cooper Software. Stock shoots up after strong quarter two earnings. Shot up 12% pre-market on Wednesday. Income was 2 cents per diluted share. Cooper Software come out. We're proud of the results this quarter. We delivered record revenues, so they sold. Strong growth in our subscription calculated billings, and we can continue to deliver strong cash flows and profitability in non-GAAP basis. So a company that caught my attention that I wanted to take a look at in the VectorVest software from that perspective. All right, let's get into the software now. And the first thing I want to talk about is the market. All right, Patrick, you can see the screen, right?
Yep.
So the first thing I want to do is talk about the market. And from a market perspective, nice open day today. Right now, it looks like a one white soldier candlestick pattern. Very little wick at the top, very little wick at the bottom. Strong trading day to the upside. So is it time to buy? Let me let you know about a couple of things looking for a market bottom. All right. Patrick and I have been covering this for the past couple of weeks or so. When the MTI, market timing indicator, hits a level of 0.60, the market's looking for a major bottom. When the buy to sell ratio hits a level of 0.28, the market's looking for a major bottom. If today's bounce represents that yesterday was the bottom, we never got to those levels fully to show a major bottom. So, is today the blast off day coming off of this potential bottom? Patrick, what do you say? I'm going to give my opinion, but what do you say?
Zoom out a little bit. And then draw a trend line from
You can draw a trend line.
Guess that's close enough.
You want me to make it darker?
No, it's fine.
Okay.
So we have this trend line from the lows back around the beginning of June. And we still have a little bit to go before we actually touch that trend line to retest it. So to say right now is the bottom, yeah, we're getting a nice update, but one day doesn't make a trend. So I would be more inclined to see us retest this trend line and bounce off it there, rather than saying this is the bottom right now.
I agree with that 110%.
And the MTI especially aligns with that as well.
Right there. That's right. Actually, I'll put that on. There's the MTI. There's the level of 0.60. There, that's the buy to sell ratio. There's the MTI with the level. Notice that they never got below. Notice that when they do get below, the market's got the propensity to move higher. That's where we were looking for a market bottom. Even if I go out to 6 months, same scenario back here. When these two indicators go below those levels of 0.60 and 0.20, the market has a propensity to go up. And I can just go out further and further and further. These are two indicators that, again, that are only found in the VectorVest system, which really will help to detail when the market's looking for a top or a bottom. Notice that when the buy to sell, when the MTI gets to a level of 1.60, all right, the market's looking for a top. What did the market do? Boom. Here, though, when the market ran up, it never got to that level of 1.60 before the market fell. But that was a lot more detailed, as into the Fed getting ready to start to raise interest rates. All right, so I'm with Patrick. I think by way of our indicators, we still have some downside. I like that Patrick drew that line to show the trend from the low that happened back in June. It never really tested it. It tested it here before it bounced. It hasn't really tested it here to show a real bounce. I still think that we have a little bit more downside. Let our indicators let you know when the time is right for the market to look for a bottom. Now, just because we say that doesn't mean that the market's going to listen to us, right, Patrick?
Facts.
The market can continue to move higher. But I'm just saying, and along with Patrick, that it really hasn't taken its turn to really put in a real bottom rather than what you see right now. Hopefully that makes sense. Is it okay to hold on to non-leverage contracts for one more day? The answer to that is yes. Let's go see if we get follow through from today's activity before you pull the trigger on the non-leverage contracts. I would like to see a reverse bullish divergence. Not so yet. It's not there. You're right. It isn't. JM Mahia says, but it has to be a way to help those people with bad credit. This is why the circle of poverty never ends. You know something? I'm with the idea of helping people with bad credit. But every time you do, what
interest rates are 5%. Come on now.
Yeah, I am of the mindset of how many times have you seen the people who have the bad credit go and default and screw over whoever the lender is? Listen, there was a time in a place where I did that on more than one occasion. All right, I took the loan and I just didn't have the means to pay it back. I got put out into that situation way off in my earlier days. But now, if I take a loan for anything, I'm in a position where I can do better and pay it back. But it's tough when you don't. It's tough to say that you want to help the people who need to get their credit right if they don't have the means to pay back the money. All right. And then to ignore that is tough. All right. Thank you, Manju. In order to do that, it's tough.
So think about it this way. You can't sell anything because prices are too high. So what do? You go to the people that don't know any better and you say, hey, we're going to sell it to you.
Yep.
Because they haven't looked at it. They don't know any better. They haven't tried because they know they can't get a loan. So all of a sudden you go to the people that have been turned away multiple times and say, okay, now we're going to give it to you with an interest rate of 5%. Let's see if you can pay that back. You know, just to try to boost their numbers and show that they're still processing loans.
And if they don't pay it back, the government backs it back up. Yeah. And so what do the banks have to, the banks are like, listen, we're going to take our chance on you, but if you don't pay it back, we're covered. If they weren't covered, they wouldn't be doing this. If they weren't covered, so it becomes predatory. However you want to look at it. So
predatorial. Predatorial.
Okay, we'll go with that too. Predatorial. I'm all about trying to help people, but you got to have the means or put yourself in a better position to have the means.
And they're targeting the people that they know can't pay back the loan.
And that's wrong.
Yeah.
And that's going to put us and it's going to put us in a bad situation economically. And then, all right. So that's what's going on in the market. Look at that, Patrick. Made some money in TSLQ. Thank you, Patrick. Are there more contra ETF stock specific suggestions? Is there a list of contra ETFs I actually, Ramor, we're going to talk a little bit about contra ETFs to take a look at today as well. All right, so I wanted to take a look at what was going on with the market just to give you guys a feeling of what you need to be doing. I'm going to just tell you to be careful. Patrick's right. One day doesn't make a trend. We got a nice little bounce today, but I still think that we've got a little bit more downside before we really truly look for a bounce. Our indicators never got to tell us that the market was truly oversold. All right, so let's go to our viewers and let's go look at the market news first. Let's go look at what's going on with the major indicators. They're all up. So Manju, again, with those double and triple leverage contras, today's not a good day to still hold them. But if you're in non-leverage, you're sitting okay. If you were in double and triple leverage, you're getting your butt kicked. I'd rather you be just okay rather than getting your butt kicked. And on a day like today where all of the major indices are up in excess of about 1.5% across the board, today is not a good day to hold on to those triple leverage contras. Henry says interest rate 5%, more like 29%. You're talking about on those credit loans. I think you're right. I think when they go put those loans out to you, those rates are like in the 30s, which again is predatory.
Which is even worse. It's even more predatory then. That's just furthering my point.
Yeah, that is, you're right, Henry. Those loans, and Patrick is right. They're going after the people that they know they can't pay. Because when they don't pay, the government backs them up. The government covers them.
You want to know the best way to keep poor people poor? Force them or give them these loans.
Yeah, that's an unfortunate reality. That is an unfortunate reality. Happening. All right. So you were talking about contras. I went and did my search for the fastest moving industries, and the number one fastest moving industry right now is ETF short. So you want to still talk about contras? I'm okay with talking about them. Today is not a good day. Let me show you what I did. Here's the Unisearch. Let's go find that Unisearch. Delta searches industries. All right. A 10-day, I'm looking at the delta of RT delta of industries 10 days ago and what they're doing over the last recent up 10 days. Look at that. The delta, RT delta on ETF shorts 10 days ago was 5.48%. Look at where it's at. It jumped up a lot. So with that being said, probably I'm going to talk about the fastest moving industry we still have right now is ETF shorts. All right, but be careful when you buy those. And I ran that. I looked at the top 5 or so in there. The other one that I looked at was Bank Foreign. Look at that. A delta last week or 10 days ago at 2.13, and over the last 10 days up 14.5%. So I ran that, and NU was the bank that I came up with within Bank Foreign, but everything else was lower. This gives me more of a feeling that the market still has more downside when I can't find RT deltas that were positive 10 days ago and even being more positive over the last 10 days. It backs up that right now the market still has more of a downward push. I still think that we've got more downside. Be careful with the update today. Is it going to be a dead cat bounce? Don't know. But just be careful. And out of the stocks that I've got picked in the fastest moving industries, the bank holding NU is up 5%. All of the contras are down today. That makes sense. But I'm going to still tell you that it's okay to get back in them tomorrow if the market moves down. All right. Today is not the day to hold on to them, Manju, especially if they're leveraged. All right. So I put that out there. All right. So, but it's the fastest moving industry. One of the fastest moving industries that we have right now is the contra ETFs. Customer picks. Guess what? Y'all didn't give me any picks for this week. Those were from, that was last week. Y'all didn't give me any new picks for this week. So, Patrick, how do you feel about looking at 6 new stocks on the fly? 3 from YouTube and 3 from Facebook. What do you think? Yes or no?
Yeah, we can do a quick.
It's gonna be quick. So I'm looking for 6 stocks. put them in. Whichever ones come in, come in. After that, I'm looking for 3 from Facebook, and I'm looking SPWR. I'm looking for 3 from MANU from YouTube and KFRC. Those were the top 3 that came in from YouTube. Facebook, what do you got? If you don't give me anything, I'm going back to YouTube. All right, if you don't give me anything, I'm going back to YouTube. Facebook, this is your time to shine, baby. Shine. Take off like an airplane. I'm trying to motivate the Facebook people. Sigh. All right. LTHM, GPS, LNG. Those are the top 6 that came in right from YouTube. Nobody on Facebook told me anything. So there we go. Patrick, pick which 3 you want.
I'll do the bottom 3. You get the top 3?
All right. Let's go look at the top 3. So these were on the fly. Wow. Look at that. SunPower is up nicely today. Probably news driven. Actually, let's go take a look. View stock news. Probably news driven. Move that over here. Let's go see 27%. 6 days ago, press release. 7 days ago, nothing. I got no press release. All right. It is what it is. It's up 13% today. Speculative play where the RV and the RSs are both below 1. RT is above 1, fastly moving. This is probably really news driven. I didn't find any news on it. But 13%. We'll take a look at it. Stock is grossly overvalued, though. Grossly overvalued. It is an optionable stock. I'm not saying that I want to hold it more than just today. Livent. I do like Livent. That is in the mining other. I believe that that's in the lithium space. All right. Also overvalued, but it's got good upside potential. Livent at least has the ability to outperform a AAA corporate bond by 17% over the next 1 to 3 years. Also in an uptrend at 1.6, the safety is below 1. This is more of an aggressive play. SunPower is more of a speculative play. LNG, on the other hand, undervalued, trading at 154 with a value of 223. Relative value and relative safety, both above 1. So interesting in that the top 3 stocks that I have, one is speculative, one is aggressive, and one is fundamental. That's kind of interesting how that worked out. So 2 out of the 3 that I have are buy recommendations, even in the current market's conditions. One is a hold, but at least I get to look at the gambit of all 3. All right. So speculative, aggressive, and fundamentally sound. Cheniere Energy is the fundamentally sound stock. Let's go look at their graphs, though. Look at their graphs over the last 3 months. Let's go put on my graph layout. And this one is going to be my, I'm going to put it on my swing for my longer term. Where is it? Glenn swing. So now I'm going to look at a 20-day exponential moving average. I like LNG, bottom left, top right, pulled back most recently, currently trading below, the 20-day exponential moving average, but I love earnings. Earnings, we like to say, is the engine that drives the stock's price higher. Again, relative value and relative safety, both above 1. Good earnings, growth at 46%. Long term, I like the stock. Right now, the stock is currently below that 20-day exponential moving average. I would wait, if I'm not in it, I would wait to go back above that 20-day exponential moving average. If you are in it and it's currently below, I wouldn't mind taking half off the table to lock in profits, especially if you've gotten in somewhere back here. I do like it long term, but right now I would say either be out of it and wait for a new entry or take half off of the table. Next one is lithium. I like this. A little bit of a U-shaped bottom. It was here, pull back. It's almost even as to where it was this time 3 months ago. Like the earnings per share. I liked when the stock's price went above the 20-day. Not only it stayed above, even on the pullback, stayed above the 20-day, broke through a level of resistance, came back, tested both the 20-day and that level of now current support, pulled back up, came back to that 20-day exponential moving average, serving as a beautiful line of support. Nice update today. Volume is okay, but I do like the earnings per share. I'd like to see it price moving up on above average volume, but the volume for the most part is pretty good. I like that nice up day. If I'm not in it, though, let's see if it can take out that 3-month high. If you are in it and you stayed through here, the 20-day did a good job of keeping you from panicking. And the last stock on the list, this was my speculative play. Nicely moving up, came back down, went below the 20-day exponential moving average. Big news today, brought it back above the 20-day, hitting now a new 3-month high on beautiful volume. Earnings are starting to rise after it pulled back. I do think that this is a more of a short-term play because it doesn't have any fundamentals behind it. All right, so that's my 3 that I took from the list. Patrick, you take the other 3.
All righty. There we go. So I got kohrs. Oh. Got a request control.
I thought you had it. Never mind. You got it now. Sorry.
There we go. All right. So I got kohrs. We've got Man U. Is that the football team?
I'm thinking it is.
I did not know it was a public.
I didn't know. That means they're a real business, bro.
I mean, they got poor long-term potential. That's not a good thing. All right. So looking at it here, starting off, man, you have everything all moved around, don't you?
No, I don't.
All right.
I just move price and value around.
So kohrs right now, undervalued, positive thing. Man U, grossly overvalued. I think we can all agree upon that. Gap, also overvalued. Looking at the numbers real fast. So kohrs definitely the best of the 3 options. Good long-term potential. Good long-term potential, less risk associated with it compared to the average stock out there. You do have a downtrend, so no surprise there. The market has been pulling back. So right now, regardless of how good the stocks look, unless the market timing tells us to buy, we wouldn't be buying any of these. Really, Man U, the only one in the current uptrend. Looking at the VST, kohrs, only one that has a VST rating above 1. All right, so let's go ahead, pull those up real quick. And then graph selected. Let's go zoom out 3-month. Oh. Find my layout. There we go. All right, so looking at kohrs, you've been in a steady decline, lower highs, lower lows. Looking at the MACD, let's zoom out a little bit. Come on. You do have a potential bullish divergence setting up where MACD is hitting a higher low here, but price is hitting a new low. I wouldn't be interested in jumping on board until I can see this downtrend start to dissipate. You've got a long ways to go and a lot of resistance shown here and here before we ever get to a point that looks like, hey, maybe starting a new uptrend. If you wanted to take the risk on a short-term trade, you do have the 3 and the 8 going positive. You do have the MACD on a short-term basis turning positive. But who's to say it's not just one of these sideways moves? Trying to look at it from a positive, or trying to be as positive as possible. Not really seeing a whole lot. If you wanted to try to adjust your trend line a little bit, you could use, where's that other point? You could use these points here. This looks to be more of a true trend line since you had the breakout, but then it came back down below that. Trying to break through it here. So on a short-term basis, once again, you may see a temporary run, but the longer-term trend still remains down. So be cautious with that. Moving on to Gap. Gap has been in a steadier decline as well. You did have the relief rally coming in with the overall market, but that hasn't saved it enough to really, get it back on track. This really goes with the overall market, just what we're seeing here at Gap, and I think you'll see it with the VectorVest composite as well. right now we're kind of in no man's land. What I mean by that is, we had that run in the summer that took out some previous lows or took out some previous highs in this downtrend. But on the longer term basis, so you did have a short term uptrend at that point. But on the longer term basis, we're still well away from the previous highs that these stocks have seen. But we're not quite at the new lows. We're not breaking the new lows yet to really say, yeah, this is definitely the continuation of the longer term decline we've experienced throughout the year. So a lot of stocks, this has been making it difficult, at least for me, over the last few weeks of trying to find stocks to bring to the table every week, because a lot of these stocks are just what I like to call in limbo. You're not continuing a downtrend quite yet. You're not really breaking that short-term uptrend. So you're waiting. You're just simply being patient, waiting to see which way these really start to trend. But for now, I mean, you have some resistance or support and resistance right here. You're retesting that as of today. Until we can see it from a longer term perspective, until we can see it break out of this previous high at around 12, I'd be cautious. Now, if you do want to take advantage of these, if you try to front run them and try to get into them early, you can do that, but just make sure your stops and your trading plan is adjusted accordingly. So that way you're not taking big losses if this is just a temporary pause before the longer term decline continues. And then looking at the last one, Man U. I mean, definitely seeing a lot of interest, a lot of buying pressure, but at the same time,
is soccer season getting ready to take off or something?
I mean, soccer is like football, or is like baseball. It kind of goes all year round.
Okay.
Like soccer has like a 9-month long schedule basically. And then they get like a 3-month break during the winter months, and then they go right back into it at the beginning of the year.
Okay.
But looking at it here, you had this level of resistance right around 1470. You failed to break above it yesterday. You did see a lot of selling pressure on stronger volume relative to what had been trading at. Today, you're getting a doji, getting indecision, so you're not really getting follow through from that weakness yesterday. But then again, you're not really continuing that blast off, breaking through that level of resistance at 1470 to show signs that this stock still has room to run. We put on stochastics. Most likely, we're going to see it. Where'd it go? There we go.
Sorry, I was typing.
So we were in oversold territory, but the pullback has created some new upside potential. We're staying above that 50 line. So stochastics are in good standings, but once again, I need to see it for a new uptrend. If you're not already into it, wanting to try to get into it, I need to see it break that 1470 level.
All right, so that was quick on the fly. 6 stocks to take a look at. Remember, I put the link in there every Wednesday to say, what stocks do you want us to look at for next week? You got to use that so we can look at your stocks. All right, let's go to my picks last week. Glenn's picks last week. What was I looking at? First Solar, Boyle. Man, I am getting my butt kicked on it. I still own it. But I'm getting my butt kicked on it.
We got stopped out of it in the Jockey Club today.
Did we?
Yep.
So I got really loose stops on it because I know that Boyle can move bigly in either direction on any day. So I've got real loose stops on Boyle. Charge Point was last week. Fang D for the tech stocks going down. That was my bearish play. Well, you buy that long. CrowdStrike was a bullish play that I was looking at along with my other stocks. Let's go see what they look like from last week. And let's do a quick test. Good gravy. Wow. First Solar did go up. Boyle kicked my butt. There it is. Yep. And let me tell you something. I'm living through that. I've got that. I'm just looking to get back up to even. I'm looking for Boyle to go up like 30% in one day, and I'll get that back. Charge Point was only down a little bit. Crowd was down over 6%, and Fang D did work out up almost 3%. So those were my picks from last week and what they did. Here's my picks for this week. Interesting that I've got a few different picks. Google was looked at on the stocks in our list today. Citigroup, NEO. I'm kind of on the fence on whether I'm bullish or bearish on Citigroup. I think that with more banks coming along with this whole thing about lending people money, I'm sort of going to kind of be bearish on Citigroup. Coupa, because it made money on earnings, but I've also got 3 biotech stocks, CPRX, Pacific Bio, and Adaptive Bio. Notice that 2 out of the 3 are up today. I'm going to look at those real quick. View the stock graph on those 3s. Look at that. CPRX, beautiful looking equity curve today. All right, but let's go put this on a 3-month graph. I like the move on it. As a pharmaceutical, bottom left, top right, I'm even going to use Patrick's layout. Stochastics, the stock is not overbought or oversold. The DPO is on the rise. I'm watching the MACD garner a little bit of strength. Would like to see the crossover. I like that today's move has it at the 3-month high right now. I like that stock. I like that stock, and I cannot lie. That's right. It ain't at I don't know what other words I was going to say, but you don't get none unless the stock goes up, hun. All right, so there we go. That should have brought a smile to some of y'all's faces because some of y'all know what the heck I was just talking about. That was cringe. I don't have a cringe. I got crickets. I'll put crickets. All right, so let's go to the next one. My next biomedical stock. It was moving up today, but I don't feel it. CPRX looks better out of the play. A lot of selling pressure. I wonder if that was earnings. No, it was prior to earnings. Sir Mix-a-Lot. There you go. AKA The Gong Show. Thank you, Roger. I appreciate that. Let's go. I'm not feeling that one nearly as much. And ADPT. These were stocks that were in the same field as CPRX. Out of the 3, CPRX is the stock that I do like. All right. Let's go look at Alphabet, Citigroup, NEO, Coupa. All right. Those are the other stocks that made the news today in what was going on. Google looks good today. Intraday, that looks like a good play. Let's go put this on a 3-month graph. Nice update today. Let's go see what happens. All right. If I'm thinking about getting into it, let's wait for the 3 and the 8 to go across. Remember, these are stocks that I'm looking at because they made the news. Citigroup, again, Patrick, would you be bearish or bullish on the bank stocks, especially the bank stocks that are jumping on with this lending?
I mean, I would like to stay bearish, but at the same time, they're willing to make as many mistakes as they can to boost their balance sheets right now because they know that the government's going to try to back them out or back them up whenever they go into the same issues they had before.
Yeah. I'm not sure where I want to be on Citigroup. NEO, they missed on earnings, but they beat on revenue. I don't know if the beat on revenue is enough to push it back up. Right now, a lot of selling pressure on the top of the wick today. Technically, with all of the technical indicators that Patrick has on here, MACD is bearish, DPO is below 0, and Stochastics is telling me that the stock is getting into the level with Stochastics. Yeah, it's at the level of being oversold. Interesting. It could have a bounce based on that technical indicator. And the last one is Cooper Software. It beat earnings. That was an earnings play. Put earnings on. That was an earnings play. I don't know. And it's bouncing off support. And the 3.8 just crossed on good volume. The stock is getting out of the level of being oversold. This could be a good jump for it. Keep your eyes on it. I think the earnings could at least push the stock's price a little higher.
You think it's running up against the ceiling, though? Do you think it's...
I don't know. I think that the overall market is going to pull it back down, but I think that it's got a couple of days to run. If nothing else, it's got a level of resistance here at 67.02. If it can get up to that, it may be able to get up to the 3-month high before it does pull back. I still think that the market's overall trend will pull it down if the market is moving lower. I do like short term what's going on, but keep in mind it is coming up against that level of resistance of 67.02. I don't like it long term. Relative value, relative safety, both below 1. It's not a fundamentally sound stock. I don't like it long term, but I think earnings could be a catalyst to push it higher. Let's go see if it can break through that level of resistance. All right, so those are my stocks going into next week. Patrick's picks, We already looked at those, didn't we?
Those are like a few weeks ago.
Yeah. And here's your new picks. Ezra, you weren't here last week. Here's your new picks. Go ahead.
So, Apple, we're going to take a look at, even though the stock's moving up higher today, I'm actually going to be taking a bearish stance on Apple going forward. Cold was one we talked about in our jockey club. Somebody brought it to my attention. I don't understand why we're seeing this, but I'll show you guys here in a second. I'm bullish on Cold. It doesn't make any sense, but charts don't lie. I talk about it time and time again, and what you're going to see in the charts will show why I'm bullish on Cold for right now.
And I'm on the other side. I'm in Boyle side.
And that's the thing is I was in Boyle. I mean, it makes sense to be in Boyle right now, but that's the thing is the markets don't act rationally all the time. And this is a perfect example, I feel like, of why. So I'm going to trust the charts and, we'll see. And then GameStop, I did a little short on our YouTube channel earlier today. They do have earnings released at 5 o'clock Eastern today. Out of the last 4 earnings, 3 out of 4, the stock ended up moving higher the next day. So regardless of, I think we're going to see poor performance. Main focus is going to be on cash burn, which they hinted at last quarter was slowing down. So that should be a positive, but I don't think they're going to have that great of earnings per share or any of that. Their numbers aren't going to look great, and I don't expect any guidance to be given as well. But when you look at the last quarter or the last year, 3 out of 4 times they had the same kind of earnings performance, and the stock still goes up the next day at least, or the next few days afterwards. So, I mean, let's see if they can keep the same track record in the current market environments than what we've had throughout that time frame. So, going to be interesting to see how that holds up. But of course, got to put it in here since it's an earnings play. And the odds so far over the last year are in our favor for seeing some sort of a bounce tomorrow. Maybe not after hours, but tomorrow's going to be an interesting trading day for GameStop, I feel like. All right, so zooming out with Apple. This is why I'm bearish on Apple. Yes, we had this breakout from the downtrend, but that is now in the past. When we zoom out, let's even go to a 1 year. What is the pattern, Glenn? What is the pattern that you see over the last year? I'm asking your opinion on it.
I see it moving down from the high.
Exactly. Every time Apple has hit lower highs and you've seen lower lows. So yes, we've been in this great rally. Stock was grossly oversold at that point. So of course, from a technical standpoint, it makes sense to see that reversal come into play. But when you zoom out, take a step back. Yes, the stock's moving higher today, but we just hit that previous high on this longer term decline. I'm taking the bearish stance on Apple, especially right now. I don't feel like people are going to go out and buy the latest Apple devices. People are going to try to get the most out of their current devices that they have.
Nope, I'm going to buy all of the devices for everybody.
All right, buy me a new.
Not you, because you're bearish on Apple. I'm not buying you jack.
All right, so there's one less product sold, so therefore Apple's going to miss that. But yeah, the longer term outlook is not looking great. We're noticing it on a lot of stocks. You're hitting slightly lower highs every time. It is what it is. So I'm taking a bearish chance on that one.
I want everybody to know that Boston uses not Apple. She's on Droid, so Boston is on the dark side. I'm just putting that out there. Okay, keep going, Patrick.
All right. GME. So this is a 1 year look back. Let's toss on earnings. So earnings here opened up lower, but ran up before that run up there. This is the one earnings that came out at the beginning of December. The stock continued to move lower. This earnings, you had a pop after that. This earnings, you had that steady run there. So 3 out of 4 earnings performances in the last year have given positive results following that earnings play or earnings call. So the next day going forward, you see positive results.
What's the trend you see on GME over the last year, Patrick?
Consolidation, lower highs, but also higher lows.
Okay.
Wicked wedge, whatever you want to call it. lower highs. And actually, if you're going off of that though, you connect that high, you have the breakout there. But right now you have the lower or higher lows. So we're going to have to wait and see.
I got you.
Consolidation though.
Okay.
So yeah, it's going to be interesting, especially, this steep line down. Every time GameStop has been pushed down like that, a steep line down, you typically see a rally back. So the steep line down, rally back. That's what we're waiting to see. And especially the fact that the 50 crossed above the 200 day, just that's EMAs. Who uses a 50 and 200 EMA?
I
You
don't
don't have it
know.
on here. All right,
No.
well, the 50 is above the 200-day or simple moving average. So yeah, on a longer term basis, you do have a long term uptrend from that, or traditional standpoint. And then you have history repeating itself, hopefully, and you see GameStop going up. Maybe it opens up lower tomorrow, moves higher, but we'll have to wait and see. And then last but not least, cold. So this was brought to me by a user in the VectorVest Jockey Club. We're going to put on a 6-month look back. And just to demonstrate, we have MACD. Oh, what is that? We have MACD steadily moving higher. And we have cold steadily moving lower. But just recently, when we zoom in, this is a little off, but the cold breakout was right here around the same time frame the 3 and the 8 crossed over. So you have cold starting to run. Once again, I can't explain it. I don't know why. Typically the charts, you see it, and then a few weeks or a few days later, a week or two later, that's when you get some news story that comes out that justifies this most recent move in cold. Charts usually show it to you early if you catch it, and that's what we're seeing here. So I'm taking a bullish stance on cold. I don't understand. I don't, see anything right now that could explain why coal or natural gas should be going down, especially
I
with all
agree
that's
with
going
you
in
on
Europe.
that.
But I mean, you can't fight the charts. So I'm taking a bullish stance on coal today.
All right. Well, that about puts it all together right there. Where'd you do it the mouse?
You got it, not me.
Uh-oh. What'd you do? Okay. So, no. I want us back on the end screen. We're done. We covered everything that we needed to cover.
Nailed it.
We nailed it. And we didn't spend a lot of time prior. We went straight into what was going on. So how many likes did we get? 50?
Only 50.
All right. It is what it is.
I've seen better.
You know me, I always like to try to get to 100 likes if we can. If we can, we do. If we don't, we don't. If you're brand new to the channel, don't forget to hit the subscribe button, hit the bell icon so you'll be alerted. Hit the like button if you like the content. Listen, you spent about an hour with us today. If you felt that it was useful, hit the like button. If you didn't feel like it was useful, you won't hit it. All right, but our job is to help you guys out. As far as individual stocks, nope. Either Patrick or I will put a link up there for you guys to put in your stocks for us for next week. That's the place to do it, Ravi. That is the place to do that. All right. Boston was here, and thank you for being here today, Boston. And Droid devices suck. All right, so I just put that out there.
I can attest to that one.
There you go. And Joey, you got Apple, right? Mm-hmm. Look at that. So
I mean, I'm the mobile man. I've done a lot of stuff on the VectorVest mobile app, and I've used both. It's not fun doing it on an Android. I'm not going to lie.
That's right, Boston.
It really isn't.
Yes. All right. With that, folks, thank you guys for being here. Patrick, you want to close this out today?
Sure.
Okay.
So yeah, I think the best advice going forward is let the trend be your friend. Don't try to front run the markets. Don't try to predict what's going to happen. Let the timing do its own thing, and let the timing, tell us when we should be getting in, when we should be getting out. Let it give us that guidance of when we need to see or when we should start stepping back in. Tomorrow we do have some big events coming up. We have the mobile training or coaching session at 11 a.m. Eastern. We're going to be talking about bottom fishing utilizing the mobile app. Everything that you need to know, we're going to be discussing it, what it is. So I highly recommend come hang out with that. Also, Glenn has Trending Thursday tomorrow as well at 2 p.m., where he's going to be talking about all the news that's making headlines and what's impacting the market. So if you want to stay up to date with that, make sure to come hang out with him at 2 o'clock as well. So thank you all for hanging out with us today. We couldn't be here without you guys, so we are truly appreciative of everybody that's here today. So thank you all once again. Have a great rest of your day. Hopefully you guys had a good long weekend. Be safe out there. Take care, and we'll see you guys tomorrow. Toodles.
Peace.